So I told you guys that AI is getting hot. You have companies like Oracle up 100% over the last 6 months after announcing plans to build all kind of data centers to grow Oracle Cloud. You have companies like OpenAI with also a lot of plans to build data centers for their business. And you have a lot of companies that want to build data centers, and AI is clearly the mega trend of our generation. But I believe the best way to play it going forward isn't really with just, companies like Nvidia and AMD, which is a stock that I own, but it's mainly with the power players and the utility kind of companies, because all those data centers, they need power. Power is critical stuff for the United States, and we don't have enough of it. And this is why it's key, which I'm going to explain in today's video. And you have the Big Short investor, Steve Eisman, which you might have seen him in the Big Short movie, or the characters that portrayed him, which was a good character, actually. And Steve Eisman, he's bullish on AI and nuclear power. He said investors should pivot towards AI infrastructure and nuclear firms for long-term gain. And if you look at the trend of the US annual electricity demand, it has been flat from 2004 actually to 2022. But since 2022, when we started the AI boom, electricity demand has been increasing, and supply in the United States has not been keeping up with demand, and the grid is very, very old, which makes it a very good investment. If you look at the current utility power and the projected utility power that we need for the demand, it's more than double the current utility power that we have because of the data centers, because of Bitcoin mining, because of a lot of the futuristic technologies that we have. All of them require power. So instead of betting on the best, let's say, data center provider or the best, chip manufacturer or the best whatever, if you're buying the power players, you're pretty much owning everything. You're betting on everything, on the entire trend, and you're benefiting from the overall trend instead of trying to pick winners. And if you look at the total data centers right now, they're consuming more electricity than countries like Italy, Taiwan, Australia, Spain, Thailand. It's absolutely, absolutely insane. And this has caused electricity prices in the United States to spike in a major way, unfortunately, and I believe it's only getting started. And those investments in terms of power, I believe they are critical to US national security, and a lot of them actually, they provide power to the US government. And I talked about this in my Intel video when the US government took a stake in Intel, and it was my most hated video. But I said that was not bearish for Intel, and it was a hated one, but Intel is playing out. And we saw the same thing happen in LAC, Lithium America. The stock went up 90% after the US government is rumored to potentially take a stake. So the government taking a stake in those companies is apparently bullish in the market. And I believe it could take a stake in the companies that I'm going to talk about today. And I believe this is a kind of an investment trend right now where a lot of people are, trying to find which company could potentially be taking a stake by the US government, and, which one is critical infrastructure for the United States. And I believe the power players are. But this investment is really no secret, which is why companies like Oklo is up over 1,500% over the last year. But I believe the stock is like in bubble territory. It's unprofitable. It's not going to be profitable before 2030, 2031. So I believe it's really the worst way to play nuclear energy. I believe the best way to play nuclear energy is with the stocks that I talked about, and I'm going to talk about it again, as I believe it's the best setup over here. All the AI stocks have made new highs except this one, and if we do make new highs, I believe we will continue make new highs. And this stock is Constellation Energy, ticker symbol CEG. We have, yet to make a new high. If we could break on this, resistance level around $350, it could be extremely, extremely bullish. And CEG is up around 29% over the last year. I think this is a national security kind of stock. It's very important. It has a wide moat, a competitive advantage, and I think it deserves a massive, massive premium. Now, Constellation Energy is not just an AI or data center bet. The company is an unregulated utility company. They provide power to more than 16 million homes and businesses, which is around 10% of all clean power on the grid of the United States. So the company, again, is very, very important, and they actually provide power to some government agencies. Now, I showed you the chart of electricity prices increasing in a major way, and that has benefited companies like Constellation Energy because based on the latest auctions, from prices increasing alone, from demand alone, guys, and because it's an unregulated company, this is gonna increase their earnings per share by 50 cents in 2026 and $1.50 in 2027. That was unaccounted for, and this boost is gonna come out of nowhere because of the massive demand relative to the supply of electricity that's happening in the United States. And this trend is only gonna get worse, which means higher electricity prices and more demand. And companies like Constellation Energy will benefit from that in a major way, mainly because, again, they are an unregulated utility companies in the United States. And again, we have so much demand that companies like Microsoft has signed a 20-year deal with Constellation Energy to restart a decades-long idled facility, which was the 3 Mile Island unit. It has been idled for decades and decades, maybe 2 or 3 decades, I think. They're bringing it back online, and this is a 20-year deal agreement with Microsoft to provide Microsoft data centers with power, and they expected right now to start delivering power a year ahead of projection. So it's been going really well. The initial projection was 2028. Now it could be as soon as, I believe they said 2027 or mid 2027. So this is very exciting. But even again, companies like Meta, guys, signed very recently, it was in June actually, a 20-year deal with Constellation Energy to provide them with nuclear power for their data center plants. And there's a lot of idle nuclear plants that could potentially come online, and it could boost Constellation Energy's growth in a major way. Now, what I really like about Constellation Energy as an investment is they have visibility in their earnings of at least 13% earnings per share growth from now to 2030. And this is due to the nuclear tax credits. The nuclear tax credits, they were implemented, I believe, in 2022 to encourage companies like Constellation Energy to restart idle nuclear plants to provide power for the boom of AI and for the technological boom in general, and to help the grid of the United States, which is, you could say, in deep trouble and needs a lot of help. And those credits, they give Constellation Energy like a floor, a minimum of how much they can charge for the powers that they provide. And the minimum, they can get a 13% earnings per share growth from now to actually 2032, so they don't expire before 2032. So no company in the entire market has visibility in earnings from now to 2032. Not even the REITs have such visibility in earnings growth. So this is an amazing investment. But they don't only have the minimum of 13% in earnings per share growth, they also have something called enhanced earnings. So enhanced earnings is normally something on top of the base earnings, which is normally on top of it 20-25%. And this is sometimes they can charge way above or way beyond the base earnings because of demand, and they can charge much higher prices, and they call this enhanced earnings. But on top of the enhanced earnings, they have the $2 contribution from their acquisition of Calpine, which would total $11.70 for 2026. Now, Calpine is a utility company that would make Constellation Energy, combined with Calpine, it would be the largest utility company in the United States. But Calpine has a natural gas fleet, and natural gas would complement nuclear in a major way, because as you could look over here, sometimes there's certain outages which could be above average, and the outages in nuclear, they are, you could say common, they happen every 2 to 3 years, and they slow Constellation Energy's growth, you could say, in a major way. Now, if you have the natural gas fleet, it could massively complement the nuclear energy fleet in times of outages. So it makes the perfect acquisition for Constellation Energy. But this is how they make money. They have the at least 13% growth from 2024 to 2030 due to the credits. Then they have enhanced earnings, 20-25%, and then they have at least $2 of earnings per share each year in addition due to their acquisition of Calpine, which they say at least, which means there will likely be much more as the company tends to be conservative. Now, if we add the $9.70 in guidance and we add in the $2, this is $11.70. So we get $11.70 for my valuation model for the next 5 years. And I put in an earnings per share growth of 20%. I believe 20% is highly achievable for Constellation Energy, taking into consideration the 3 Mile Island, the Meta deal, as recent auction data, which provide $1.50 increase in earnings per share for 2026, which was not priced in the estimates, and other potential things that could happen. In my opinion, it could be way beyond 20% earnings per share growth. So I think 20% is achievable. If I put up those numbers, I get $29.11%. $29.11 in earnings per share 5 years from now. The current PE ratio is at 32 times earnings, which may seem like a bubble, but I'm going to give you different estimates for potential upside. But I believe 32 times earnings is really not too much for a company that's becoming more and more important for the United States, especially right now with the deficit in power supply that we have and all the data center boom and everything that's happening. They all need companies like Constellation Energy. But I put up 3 estimates. I put in 20 PE, 25 PE, and 30 PE. 20 PE, in my opinion, is like the worst case scenario if the company or the stock retraces to like 18, 20 times earnings, which would be like the worst case scenario. And I highly see that happening after the recent boom. I mean, I just don't see it happening. But let's say it happens again, and using my own estimates, I'm getting 73% on the upside over the next 5 years, which is really not bad at all from today's price. Now, using the mid-case scenario, so the base case, I would say, is 113% over the next 5 years, which is not bad with a utility company. Best case scenario, which isn't really the best case scenario, but let's say they maintain the multiple and everything goes as I told you, I see up to 157% upside over the next 5 years, or $874 per share. The stock right now is trading at $332 per share. Now, if you want to double your money over the next 5 years with the worst case scenario of 20 PE, I would prefer the stock around $290. So I think $290 would give you a little bit more of a margin of safety if you want to wait, if you want to be patient. But I think if the stock makes a new high, which is due to make a new high relative to other AI stocks in this crazy market, I don't think it's gonna stop here. So I still like Constellation Energy very much. I still own the stock. I like it a lot. And I see, again, up to 100% upside over the next 5 years. It could potentially be much, much more. And this is my favorite way to play AI going forward. And the Big Short investors agrees with me on that. So this is nice to see. And that's my opinion on AI and Constellation Energy. So I hope you enjoyed it as always. It was not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.